All right, today we're tackling a big one. We're diving into a stock that has been on an absolute monster run, and it's got everyone asking the same question. Is this thing a rocket ship, or is it a bubble that's about to burst? The stock is INTC, and the whole story really boils down to one incredible number.
Yeah, you heard that right. 84%. In just 6 weeks, INTC shot up by that much. Now, a move that massive doesn't just turn heads, it snaps them. It's the kind of rally that makes legends or, some pretty serious cautionary tales.
And that is the multi-million-dollar question, isn't it? Because while the momentum is just undeniable, the data underneath the surface is flashing some pretty serious warning signals. It's like a classic showdown between an unstoppable force and an immovable object. So let's get into it and see what the charts are really telling us.
First, let's just trace the path of this rocket. As you can see, after hitting a bottom just over 19 bucks back in early August, INTC just went, parabolic. It peaked out at 35.5 by the end of September. That's your 84% rally right there, a powerful, almost vertical recovery. So the question is, what lit the fuse?
Okay, so let's start with the bull case. What are the clues that suggest this rally might actually have more fuel left in the tank? First up, and this is a big one, you gotta follow the money. I mean, look at these volume numbers. The amount of shares changing hands on the way up is just staggering. We're talking spikes of over 500 million shares in a single day. This isn't just retail traders hopping on board. This kind of volume suggests that huge institutions are getting in and they're placing some major bets that this thing is going higher.
Next clue? Look at where the price is living right now. It's not just floating above its short-term averages. It is soaring high above its 50-day and even its 200-day moving average. Now, these are key long-term trend indicators, right? When a stock gets this far above all of its major support lines, it's a classic textbook sign of some seriously powerful bullish momentum. The trend is up, period.
And if that wasn't enough, just look at the dashboard here. It's basically all green lights. You've got the MACD, which is all about momentum, not just positive, but growing. The ADX, which tells you how strong the trend is showing it's very strong. And then you have the Arun indicator, which is basically at a perfect score, 100% up, 0% down. It's tough to get a clearer signal of just pure upward dominance. But, and this is a big but, this is where the story starts to get a little complicated.
Because, for every piece of evidence that's screaming, go, there's another one right next to it that's flashing a bright red warning light. So now we have to flip the script and look at the other side of the coin. The signs that this rally has maybe gone too far, too fast.
So, before we dig in, let's quickly talk about this term you hear all the time, overbought. What does that actually mean? Well, think of it like a sprinter who's been running at an absolute dead sprint for way too long. They just can't keep up that pace forever. Eventually, they have to slow down, catch their breath. In the market, that catching your breath is usually a price correction.
In this slide right here, this is the whole story in a nutshell. It's like the stock has a split personality. On the left, you've got all those bullish momentum signals we just talked about. But on the right, you have indicators like the RSI screaming a warning. It's at a super high level of over 80, and anything over 70 is usually considered a red flag. The stochastic oscillators are telling the same story. It's a technical tug of war, plain and simple. And this chart, wow, this really puts it all into perspective. Based on a statistical analysis, basically where the stock's price should be based on its recent trend, it should be somewhere around 27 bucks. But where's it actually trading? Way up at 35.5. That is almost 30% above its own trend line. The stock isn't just running hot, it's basically detached from its statistical path, which almost always means a pullback is on the horizon.
So, what do you do with all this? You've got this incredible momentum clashing with these extreme overbought warnings. How do you make sense of it? Well, the analysis lays out a kind of roadmap of what could happen next. It does this by identifying key price levels and then gaming out a few different scenarios.
Okay, so these numbers here, these are the new battle lines for the stock. Think of the resistance levels up top, 36, 38, 40, as price ceilings that are going to be really tough to break through. And on the flip side, you've got the support levels below, 33, 31, 29, acting as price floors where buyers might jump in and stop the bleeding. What happens next really depends on which of these levels breaks first.
And based on those battle lines, the analysis maps out 3 potential paths. Scenario 1, the bulls stay in control, and this epic run just keeps going, smashing through that first ceiling. Scenario 2, those overbought warnings were right.
Traders start taking profits and the price pulls back to that first floor for support. Or scenario 3, the stock just chills. It trades sideways for a bit while the market figures out what to do next.
So out of those three, which one does the analysis lean toward? Well, given just how extreme those overbought readings are, the most likely outcome probably isn't another moonshot or total collapse. It's a cool down. Think of it as either a small pullback or some sideways trading to let the stock catch its breath after that massive run-up.
Okay, so let's tie this all together. We've seen the bull case, we've seen the warning signs, we've seen the possible paths forward. What's the final takeaway from this whole technical deep dive?
You know, I think this one sentence from this source report just absolutely nails it. It's not a clear buy, it's not a clear sell. It is a high-risk situation, and it's defined by this intense battle between its incredible momentum and its dangerously overstretched price.
So what does that mean in plain English? It means INTC is basically walking a tightrope right now. The potential for more gains is definitely there, but so is the risk of a sharp, sudden pullback. This is not a situation for the faint of heart. The analysis really hammers this point home. This kind of volatility demands some serious caution and really tight risk control if you're involved.
And that really is the question that this whole thing leaves us with, isn't it? We have seen all the technical reasons why gravity should take hold here, but in a market that's so driven by momentum, can a supercharged stock like this one just keep defying the odds? The answer, I guess, is going to unfold on the charts, one day at a time.